Okay, so we are at the midway point of September. We've just kicked off the fall Toronto real estate market, and now everybody's trying to figure out what the hell is going on. So that's a great question, and that's what we're going to talk about here today. My name is Ralph Fox, and I am the co-founder and broker of record of Fox, Marin Associates. We are a boutique residential real estate brokerage that focuses on central and downtown Toronto. If you find any of this content helpful or interesting, please be sure to smash that subscribe button down below. And if you have any questions or comments or anything to say that's constructive, we'd absolutely love to hear from you. It's really interesting because if you look at what happened over the summer, it's a bit of a different story than what we were expecting in June and July when we had those two surprise interest rate hikes by the Bank of Canada. And really the narrative in the media and a lot of water cooler talk was that these two increases could be the straw that finally broke the back of Toronto real estate. And so there was a lot of expectation of an immediate impending downturn that quite frankly never really happened, at least yet. So I've got some interesting charts that were put out by the Toronto Real Estate Board, and we've taken that data and then put them actually into chart form. So the first thing we're going to look at is average price. So what we can see here is that the average price from month over month, from July to August, basically flatlined with the top line here, which represents detached homes. Semi-detached saw a slight decrease in prices, going down to $1,235,000. A little bit of a drop off in townhomes and condos. Probably had the biggest drop off from $753,000 to $724,000. So interesting to see not a major drop off in pricing as a result. And a lot of these numbers are typical of what you'd see in August. August is really the slowest month in Toronto real estate, and it's typically the time most real estate agents go away on vacation because of that. And so during the dog days of summer, of August, we really didn't see a drop off in pricing. And what's even more interesting and more surprising is this next chart, which is month over month of inventory. And this is something we at Fox Marin track religiously because it's a really good indicator of the health and velocity of the way a market is performing. So what's really interesting here is we saw in the 416 actually a slight uptick. So in July, we had 3.21 months of inventory, and it went down slightly to 3.13 months of inventory. So that was something that was surprising because a lot of people were thinking that there'd be more inventory coming to market and we'd start to see a bit of a buildup. Now, to give a frame of reference here, anything between 4 to 6 months is considered to be a balanced market, but anything 4 months or below is a seller's market. So at least over the summer, we were still very much in a seller's market territory, and not much had really shifted. Now, a lot of this information, it's important to understand, are lagging indicators because now we're in September. And we were having a lot of conversations with clients over the summer, and a lot of uncertainty surrounding interest rates and inflation. And it was very difficult and it still is actually, but we were really advising a lot of our clients to wait till the September 6th announcement to see what the bank did. And of course, we know they paused. They were a little bit hawkish in what they were in their statements. However, they did in fact pause. And I think that gave a little bit of certainty to the market, which had been very much destabilized by those two surprise increases that we saw both in June and July. So now we're into September. We're on the other side of the Bank of Canada announcement. And so it's important to understand what do things look like currently, boots on the ground. So what we did is we pulled data from September 4th to September 10th, and we looked at it both from low rise to condos, and we compared those numbers year over year just to try and get an early indication of what's actually happening in the market. And we have seen an uptick in inventory coming to the market. So that's a bit of a shift from what we saw in August. So from September 4th to September 10th, we saw 634 new freehold listings come to market. The year prior, last year, during that same period, we saw 424 new freeholds coming to market. So that's almost a 40% increase in new inventory coming to market. Now, what's interesting is in that first week back after Labor Day in September 2022, there were 134 sales compared to just 82 sales. So we're seeing more inventory coming up and less sales. But what is interesting is we have seen an uptick in prices this year over last year. Last year at this time, freeholds on average were selling in the 416 for 1.43 million. Right now, they're going for 1.67 million. We saw 100% of asking in 2022. And right now in 2023, we're seeing 102, slightly above asking. And it does seem to be what we're seeing on the freehold side, especially, is that good properties, vacant properties, well-staged properties, desirable properties are definitely attracting a lot of attention. We've had buyers offering successfully in multiple situations on properties with 5 or more offers. Now, we're not seeing crazy record-breaking numbers like we would typically see in past Toronto real estate markets with 5, 10 offers on a property. But still, we are seeing a lot of buyer interest and activity and people putting pen to paper. And the numbers that we're seeing for good properties are still actually selling at a really good price on the freehold side. Now, this is where we diverge a little bit because the condo side is going to be a little softer than the freehold. And that gap probably is going to continue at least for the next few months. So let's dive into condos now. So from September 4th to September 10th, there were 924 new condo listings. Now, last year, there were 663 new condo listings at that time period. So again, we've seen an uptick of 32% more condo listings coming back to market. But where it's even more striking is that we're seeing far less sales. So the first week in 2022, we saw 222 condo sales. And this year, we've seen 131. But the biggest divergence are sale prices. We saw condos at this time last year selling for on average as high as $872,000 in those weeks. And we've seen that drop to $786,000. So we're seeing a lot more inventory and we're seeing lower prices and lower sales. And that is being exacerbated far more on the condo side than the freehold. That makes a lot of sense because we're seeing a lot of investor condos coming to market, and those condos are tenanted, and those condos are going to be a real problem to sell because if a landlord can't make the numbers work because they're on a variable, it's going to be very difficult for an investor, and most end users are not going to want to buy a tenanted property. And most investors are not going to want to probably be investing right now in the condo market where rates are where they're at. So it's definitely going to be a bit of an interesting cat and mouse game. There's going to be great opportunities for buyers, for first-time buyers out there who are able to negotiate and who are going to have the ability to be one-on-one talking to, a prospective seller in terms of negotiating terms that are far more favorable. And this is something that is a big rarity in Toronto real estate. And so if you're one of those people who believes in the long-term opportunity of Toronto real estate by understanding the supply and demand mechanisms that we have playing out over the next 3 or 4 years, we could be entering into a really good opportunity if you're a first-time buyer to actually get a property that you like and really, really are excited about, as opposed to just trying to get something or anything. And the opportunity being is that you would lock in for 2 to 3 years and then refinance at much lower rates, hopefully in the future. So we're definitely going to expect to see some softness in the condo market over the next couple of months. I think the freehold will remain a lot stronger, but you will see a divergence both in condos and in low rise, where you'll see vacant, staged, desirable properties still performing much better than you will of tenanted properties or properties that aren't being marketed, or more of your generic type condos probably are going to struggle a lot more than they have in the past. And so it'll be really interesting to see what plays out over the next few months. But overall, we're still seeing a lot of activity in the market. It's definitely slowing on the condo side, but it will be interesting to see how things play out as more economic data comes out later on for the month of August. And then ultimately seeing what the Bank of Canada is going to do in October, I think will also be a huge driver. But if you're a first-time buyer or you are looking to get into the market, this is a really great time if you believe in the long-term future, as we do, of Toronto real estate. If you're an investor, our strongest recommendation is just to hold onto your portfolio right now, because in a few years' time, I think you'll be very, very happy. And if you look back, basically the last 30 years of Toronto real estate, anybody who's ever sold has regretted it. And I think you will be in the same boat. Please really, really be thinking clearly if you're going to sell, if you're an investor, as to why you're going to sell and as to how you can better deploy that capital long term. And if you're looking to make a move up, down, lateral in the market, you really need to be thinking through what is the best strategy now, so more than ever, because I think the margin of error is getting wider and wider in terms of your ability to make a mistake or your ability to make a great long-term strategic move. So I hope you find this content and discussion helpful. Once again, my name is Ralph Fox from Fox Marin Associates. If you have any questions, we'd love to hear from you down below. And please feel free to smash that subscribe or like button.